Welcome to Market Watch, where today we're dissecting Singapore's stock market trends. It's alarming that 8 companies have delisted this year, with only one new IPO. Dr. Tan, is this indicative of a larger issue?
Indeed, it suggests a lack of liquidity in SGX. Companies find their stocks undervalued and scarcely traded. For instance, Ban Leong Technologies opted to leave, as have others. It's a concerning trend.
Some point to high compliance costs as a drawback. However, doesn't SGX's strict regulatory framework ensure market integrity?
That's true, yet smaller firms argue that the costs outweigh the benefits when their stock is not attracting investors. It's a double-edged sword that affects their willingness to stay listed.
Could this lack of activity be due, in part, to investors' preference for tech-heavy markets like Hong Kong or the US?
Absolutely. When tech giants dominate headlines and market caps elsewhere, it makes SGX's property and banking focus less attractive. Without our own Magnificent Seven, investor attention wanes.
In terms of new listings, the picture remains bleak, with Vin Holdings being the lone IPO this year. Mr. Lim, what's scaring companies away from SGX?
The main concern is market vibrancy. Hong Kong and the US entice companies with their dynamic and diverse investor bases. Here, companies see limited trading interest, which is discouraging.
And the MAS Equities Market Review Group's efforts, like the $5 billion liquidity boost, are they addressing this concern effectively?
While commendable, these actions might be insufficient. Critics argue they're reactive rather than proactive. It's like placing a Band-Aid on a much deeper wound that requires structural ingenuity.
What about regional cooperation, like partnerships with neighboring exchanges? Can these foster more robust market activity?
That's a promising concept. Cross-listings or joint ventures could increase visibility and volume, potentially drawing interest from broader investor pools.
But aren't there risks in such partnerships, like regulatory differences that could complicate operations?
Certainly, it poses challenges. However, with careful alignment of standards and strategic planning, it could offer a mutual benefit that outweighs the risks.
Some have suggested that Singapore's Sovereign Wealth Fund, GIC, invest more heavily in local stocks to boost confidence. Professor Wu, would such a move work?
It might. If GIC shows faith in SGX listings, it could act as a catalyst for other investors. It's like having a seal of approval from a highly respected entity, which can be quite persuasive.
Critics argue that easing short-selling rules could stimulate trading. But isn't there a risk of market manipulation?
That's a valid concern. Despite this, regulated frameworks can mitigate risks. We can look at certified programs for potential traders to ensure responsible participation.
And looking forward, should we focus on establishing a dedicated tech sector within SGX to draw interest and competition?
A tech initiative could be transformative. As we've seen elsewhere, tech sectors drive growth and innovation, and tapping into this could yield long-term benefits for the SGX.
So, considering all these potential strategies, do you believe that incremental changes can revive the SGX, or are bolder moves required, Mr. NG?
Incremental changes may only offer temporary reprieves. To ignite sustained growth, bold strategic decisions are essential. This might involve leveraging regional partnerships or introducing aggressive reforms.
What long-term vision should stakeholders focus on to restore investor confidence and attract global interest?
Prioritizing a diversified and innovative market structure is key. Incorporating sectors with growth potential like technology and biotech will signal a forward-thinking approach that could draw international capital.
Yet, bold moves come with risks. How can these be managed to ensure stability during this transformative phase?
An adaptive regulatory framework will be crucial. Establishing clear guidelines while allowing room for innovation can balance growth with necessary safeguards.
It seems a dynamic shift could indeed reposition SGX as a leading hub. Thanks for joining us, and thanks to our listeners.